Hello and welcome if you are joining us today for our Voluntary Compliance Agreements webinar. We are the Ohio Division of Unclaimed Funds. Thank you for coming today. I am Susie Wagner, the Outreach Supervisor for Unclaimed Funds. We also have George Gladden, the Compliance Manager, and Kelly Lister, our Legal Counsel for the division. And we are excited to go over everything about voluntary compliance agreements. Please make note, if you're just arriving, of our contact information. We have our phone number and our email listed here on the title slide. Make note of that. Should you have any questions, feel free to email us, and you can also type your questions in the chat. Should we have time, it'll be pretty tight on time, but should we have some extra time at the end, we are happy to answer your questions. So I'll give you just a moment to make note of those names and email addresses for your questions. And again, you can also type those in the chat. Thank you for joining us for the Voluntary Compliance Agreements webinar. Happy Wednesday, everybody. Okay, so just to go over it again, George Gladden, his email is unfdcompliance@com.ohio.gov, and Kelly Lister is legalucf@com.ohio.gov. You can always call us at 614-466-4433 as well, and we'll get started. So on average, the claims last year was $4,269. Before we get into the voluntary compliance agreements and reporting, I wanted to just share with you a little bit about the claim side of unclaimed funds. So the average claim last year was over $4,000. We are currently safeguarding $4.3 billion in unclaimed funds. Last year, we paid out over 26,000 claims, and we returned $149 million. So I want to make sure that everyone here knows that you should be checking your name to see if you have funds to claim, if any of your family members or deceased loved ones, especially. And when you do go to claim those funds, it is just 3 easy steps. You're searching your name to see if you have unclaimed funds. You're reviewing our checklist of documentation to see if you have, to see what documents you will need to provide to us so that we can verify you're the rightful owner. And then you just send it to us. And you can do that online or via mail. Today's agenda. We're going to go over quickly, this is just a 30-minute webinar today, the history of unclaimed funds, the Ohio Revised Code, reporting or non-reports, deadlines, filing extension, consequences of not filing, everything about the voluntary compliance agreement, resources, and if we have time, a Q&A. With that, I turn it over to Kelly Lister.
Good afternoon. As Susie stated just a moment ago, my name is Kelly Lister. I'm an attorney with the Department of Commerce, and I represent the Division of Unclaimed Funds. I'm excited to be here today to talk with you about an exciting program that we offer at the Division of Unclaimed Funds, the Voluntary Compliance Program. It is an efficient and effective way to bring your business into compliance with the law and best ensure lost and forgotten funds can be located and returned to their owner. Revised Code Section 169.01, subsection B, defines unclaimed funds. Unclaimed funds are lost or forgotten money that is reported into the custody of commerce and is held in trust until claimed by their rightful owner. Interest accrues on the funds while it is in the custody of the Department of Commerce. Common examples, as you'll see in the slide before you now, are inactive checking accounts or savings accounts, life insurance benefits, and even safe deposit box contents. Categories of unclaimed funds changes as the methods and means of commerce changes. For instance, virtual currency is something that's confronting unclaimed property administrators currently, and it can be especially challenging given the nature of virtual currency is being conducted in a way that is foreign in many respects to the way that business has been done previously. Next slide, please.
So reporting is a four-step process. First step is to go through and identify any inactive accounts. All businesses or companies that are located in Ohio or doing business in Ohio are required to report to the Ohio Division of Unclaimed Funds annually. Even if you don't have any unclaimed funds to report, you're required to file what we call a negative or a none report. So the first step is to look for anything that might be dormant. And dormant means there's been no owner-generated activity over a certain amount of time. The second step is to perform a due diligence mailing. So you send out letters, a notice of unclaimed funds form to the last known address of the owner of the funds with a self-addressed stamped envelope. If they sign it and return that to you within 30 days, that item's not unclaimed and it's not reportable. But if it comes back undeliverable, or if it comes back, it doesn't come back signed within 30 days, those items are reportable. And so the third step is to create an unclaimed fund report. And so you can report through the Ohio Business Gateway electronically, and we accept ACH debit payments and credit cards through the Ohio Business Gateway. Or you can upload through our website and send us a check. So that's the final step, is to submit your report. So let's take a look at the first step, which is to identify dormant accounts on the next slide. So as I mentioned, all businesses are required to review their accounts annually for items that are dormant. And that's got to be owner-generated activity. So if you're just sending them a statement, then that's not considered owner-generated activity. But if there's been a payment, a recent visit, if there's been a login by the owner of those funds, that's considered owner-generated activity. So examples are refund checks that haven't been cashed for 3 years, or checks or a checking account that hasn't had any activity for 5 years, or it could be a patient credit that a physician's holding where the patient hasn't returned for 3 years. So on the next slide is we're going to go into, we have a document that's available for download on our website, com.ohio.gov/report funds. Just some guidelines for going through and doing a self-examination of your accounts. And you're going to look at outstanding checklists, aging of accounts receivable reports, patient credit reports, could be stocks, bonds, intangibles. And so you go through and you identify those items that might be dormant. And then the next step is to look at items where perhaps something's misposted or it's not really due the owner. But once you establish that you have some dormant items, and there are lots of different kinds of unclaimed funds, and each has a dormancy period. And in this document at the very end is a list of those. But you go through and you eliminate those, and then you move on to the next step, which is to do that due diligence mailing. That's on that. There we go.
What you see on the screen before you is what's identified as OUF Form 8, Notice of Unclaimed Funds. The Form OUF 8 is a valuable resource. It is a division-created template for a due diligence letter that is required by state statute to be sent to the owner of the lost and forgotten funds, at least based on your records, to the last known address you have. So the content is compliant with the due diligence letter required by virtue of revised code section 169.03 subsection E. You can create a notification of your own, but the notice you create must comply with these same statutory requirements. The law essentially requires that you make one last attempt to contact the owner of the funds at their last known address at least 30 days prior to reporting them. As it states in the slide, this notice is required for funds totaling $50 or more. It is not required for funds that are less than $50. The notice has to be mailed by first-class mail if the item of unclaimed funds has a value of $50 or more, but less than $1,000. And it must be sent by certified mail, return receipt requested, if the item of unclaimed funds has a value of $1,000 or more. That the cost associated with the certified mailing can be deducted from the unclaimed funds, capped at $20. Next slide, please. So mentioned a moment ago is the idea of a non-report. Every holder or potential holder has a statutory obligation to review their books and records each year. A holder is defined as any person that has possession, custody, or control of monies, rights to monies, or other intangible property, or that is indebted to another, if any of the following apply. That the person to whom you are indebted resides in the state of Ohio, or that person, which can also include a business entity, is formed under the laws of the state of Ohio. Or such person is formed under the laws of the United States, but has their principal place of business in Ohio. Or if your records indicate that the last known address of the owner or person entitled to recover the monies resides or located in this state. So a non-report or a sum report must be submitted each year simply to evidence compliance with this annual obligation to review your records and identify funds to which you have no ownership interest. A non-report and sum report are both equally significant in that respect. And please understand, it's a fast and easy process to complete and submit a non-report online. Next slide, please.
There we go. Classic blender. So unclaimed fund reports are due by November 1st for anything dormant as of June 30th of that year, with the exception of life insurance companies. Those reports are due on June 1st for anything dormant as of December 31st. So we are right in the middle of reporting season. So your reports are due by November 1st. Now, if you are approaching the November 1st deadline and you realize, oh goodness, I still need to do my due diligence mailing and we're less than 30 days away, on the next page, you can request an extension. If you go onto our website, into those 4 steps under the reporting section, if you go into step 3, there's a place here to go online and request an extension. So if you just fill out the form that you see on the screen and submit that by November 1st, and you automatically get the extension. You can request 30 days, 60 days, 90 days, or 120 days. You are only able to request 1 extension per year. So if you're not sure if you might need the extension, or if you don't know for how long, we recommend that you request 120 days. All right. So what happens if you don't file? Well, there are consequences. You may be selected for an audit. They are involuntary, and we generally select them by random. But we do consider things such as the size of the company, the type of the company, how they've reported in the past compared to similar companies, whether or not they've entered into a voluntary compliance agreement. And it's as far as to determine if we want to go in and audit that company. And that's given by Ohio Revised Code 169.03, Section G, Section 1. Other consequences, Kelly, if you'd like to mention the fines and penalties. You're on mute.
I apologize. The division is authorized additionally in some instances to assess interest. The division does not want to be punitive, but its purpose is to ensure compliance with the law. It's a simple mission. It's to return funds to their rightful owners, and the division is committed to working collaboratively with holders, not to penalize them. And as George stated a moment ago, reporting history is a factor for consideration for audit selection. And if you establish a good reporting history, that is to your benefit, not only for your customers, your business partners, and your customers, but also for ensuring compliance with Revised Code Section 169. I think that if we go to the interest that is assessed would be on top of the civil penalty amounts. And obviously this is reserved for those cases in which it appears a holder is being intentionally non-compliant. Next slide, please. The voluntary compliance agreement program requirements. It's designed to be simple and straightforward. The program is offered through the division. So there is a template for a voluntary compliance agreement. It's not the subject of negotiation. There are some simple requirements for eligibility to participate in the program. You cannot currently be under examination or be noticed for examination by the division. The requirement is that you conduct a self-examination, and earlier in this presentation, George went through basically instructions about how to do that, how to conduct a competent self-examination. And then you are required to remit the audit findings, the amount of the audit findings, along with the report and the remission of the unclaimed funds that you've identified after conducting that self-examination within 60 days of the execution of the voluntary compliance agreement. What you see underlined on this screen before you is self-examination strikes have the fund codes. What I guess by way of explanation, there is no federally mandated unclaimed funds law. It is largely a product of state law, but out of necessity, the states have developed through a nationwide organization to which all states are a member, called the National Association of Unclaimed Property Administrators, a code, a language, a coding for unclaimed property types, so that when we reciprocally report unclaimed funds to one another, and when we're working collaboratively, we know we're using the same identification, the same coding for those fund types. And so there are instructions that help you identify, based on whether it's an accounts payable or it's a security deposit of some sort, how that would be coded in your unclaimed funds report. Basically a shorthand way to identify the nature of the unclaimed funds you're reporting. And that can be found, and here are instructions about where you can find it. As a prerequisite, just like all other holders, once you enter into a voluntary compliance agreement, you conduct your self-examination, you identify reportable funds. Prior to reporting and remitting them to the Department of Commerce, you must complete that due diligence mailing prior to the report and remission of those funds. And that due diligence mailing has to provide the owner of the funds that you're attempting to contact at least 30 days to respond. And additionally, as outlined here on the slide, you have to be able to provide supporting documentation of any estimation techniques. And you use estimation techniques when your records don't go back that far. You don't have records, but you know by virtue of those records that you do keep on average what you identify on an annual basis as reportable unclaimed funds for that particular property type. You need to know the exact dollar amount to be reported. We don't report an estimation. There has to be a sum certain that is reported and then identified to belong to each respective owner. Next. Oh, and finally, last year we had 31 companies participate in the program, and they reported over $1.2 million. This is an exciting opportunity for holders to bring themselves into compliance, relieve themselves of record-keeping responsibilities and accountability and liability for funds in which they have no interest, and ensure that the funds are tracked and centrally located with Commerce, and while in the custody of Commerce, they accrue interest. It is a win-win on both sides of the coin, and this is a program that the division is committed to expanding over time. We hope to see the number of companies participating increase from year to year, and the amount recovered and returned to the rightful owners likewise increase year after year.
Ellie, if you don't mind me jumping in, this is, the voluntary compliance agreement is the simplest, easiest way to come into compliance and to catch up on reporting. If you haven't reported, if this is the first you're ever hearing of reporting unclaimed funds, or if you missed a year here or there, or that you're holding funds from many years ago, it is the easiest way. So like Kelly mentioned, we are working on expanding the program, and we hope that you talk to your colleagues, or if you have any clients, that you share that information with them.
Next slide, please. Important to underscore here is that once a holder identifies and reports and remits unclaimed funds, they are held harmless by state statute, and that is found in Revised Code Section 16907. That statute provides that once a holder, in good faith, reports and remits the unclaimed fund, they're held harmless by the state of Ohio from any and all liabilities arising from any claim associated with the transfer of those funds to the state, to the extent of the value, the full value of the unclaimed funds that have been reported and remitted. If legal proceedings are instituted against a holder because of their reported of unclaimed funds, they simply need to notify the director in writing of the pendency of those proceedings within 14 days to allow the state an opportunity to review the complaint, make a determination as to whether it's going to elect to intervene and assume the defense, and obviously do whatever they need to make sure that they respond timely in the event that they do elect to intervene and assume the defense in that litigation. Also, no person has a claim, and this is important in some instances, and it's relative to the property type that's being reported, but in some instances, there are holders that are concerned about a claim of a diminution in value based on the fact that something has to be liquidated prior to reporting, because we're dealing here with liquidated funds that are reported and remitted to the division. And there's an express provision made in 16907 that no person has a claim against the state or the holder for any diminution in value resulting on account of the report and remission of the funds as unclaimed funds to the Department of Commerce. Next slide, please.
All right, looks like we have our poll. We are offering continued legal education. So if you would please just take a moment, just click off on, are you planning to submit a voluntary compliance agreement? Yes, no, or I don't know, and then click submit for us. Please don't click on the X or else that will close the poll altogether. All right, now as far as the process, for submitting your voluntary compliance agreement, so the first step is to do your self-examination of accounts, perform the due diligence mailing, and then you can download the agreement that we're about to go through from our website, unclaimedfunds.ohio.gov. You fill out the agreement and then submit that to us. You can send it to me at unfdcompliance@com.ohio.gov. Make sure that you sign it prior to sending it, and then we will review it and have our legal section sign it. We will also have our superintendent sign it, and once it's fully executed, we will send it back to you with instructions. You'll have 60 days to report those funds to us. The agreement is a contract with the state of Ohio, so you can't alter it, and you are expected to fulfill your end of the contract. Some of those benefits, like Kelly mentioned, is that once you do report those, you're held harmless. And you also you are relieved of any fines and penalties regarding those funds. So we do ask that you do not submit your report until you receive that signed voluntary compliance agreement back. Looks like 2/3 of you are not sure if you want to send in, and 1/3 is no. So thank you for responding to that poll. All right, so on our next slide is the actual agreement.
So everybody, we want to give you an idea of what the VCA looks like, the agreement that we offer to holders. The instructions are pretty detailed here to give you a clear pathway as to how to complete them and answer any commonly asked questions that we've experienced over time. Now here, in the very first paragraph, you're identifying who you are by name, address, and state of incorporation. State of incorporation is important in many respects because for those accounts for which you have no identifiable last known address for the reported owner, the federal common law provides that those funds would be reportable to the state of incorporation, which if it's the state of Ohio, means that it would be appropriate in those instances to report it to Ohio. Paragraph number 2, just to give you an idea here, we're talking about identification of the nature of the funds that you're holding. As I said earlier, there are what's called property codes that are assigned to those, but it's not necessary that you identify the property in that way. You can do it just by Carmen, this is an accounts receivable, this is a deposit, and we can translate it as far as what sort of property code it should be, should appear in our database. We do need an evidence that you have completed a review of your records in the time period over which that record review was covered, and there it's done by fiscal year, from July 1 to the following June 30th, that we ask you identify the period of review. Paragraph 3, there you're identifying, okay, the sum certain. After a review of your books and records, you have identified unclaimed funds due and owing another person or entity, and you identify there the specific amount in total that is due. Paragraph 4 is talking about the due diligence mailing, which has to precede any report and remission of unclaimed funds to serve the important public policy purpose that we want one last ditch effort to be made to return the money to the rightful owner at the last known address at least 30 days prior to reporting them to the Department of Commerce. It saves everybody a lot of time and effort if that last effort is successful. If it's successful, then you know how to reach your customer or your business partner, and you can return the funds to them, or that would then toll the period, and a new period of dormancy would be triggered if they're based on the nature of the property. They wish for you as the holder to continue to hold those funds for whatever reason. And then at the end of that paragraph 4, there is an affirmation and acknowledgement that needs to be completed. Paragraph 5 is simply reciting what George had shared with you earlier, that once we enter into this, you are to submit and remit the funds within 60 days of the date of the agreement. So, and you sign it, you submit it, you complete it, sign it and submit it rather, and then the division will review it and sign it, and following that begins the 60-day period in which you have to complete it by the report and remission of the unclaimed funds. Can you go to the next page of the voluntary compliance agreement? So at the very top on paragraph 9 is the important incentive here, because the state of Ohio agrees to waive all penalties and interest on monies that are reported on unclaimed funds that are reported and remitted pursuant to the voluntary compliance agreement. Paragraph 12 is simply an acknowledgement that going forward, you're going to continue to review your books and records on an annual basis and either file a none or a some report in compliance with the law. The paragraph 16 is what one would expect. You're contracting with a state agency. This is going to be governed and construed according to the laws of the state of Ohio. And then the last page is simply a acknowledgement and a signature by the holder, identifying themselves by name and by tax identification number. And that's the sum and substance of it. It's a very straightforward agreement. I think very easily understandable, but obviously there's lots of resources, lots of contact information we're going to give to you to contact us anytime you have a question or require additional clarification.
We'll make sure that we put the contact information back up. But if you have general questions, you can visit our website, unclaimedfunds.ohio.gov. To go and see if you have any unclaimed funds out there, go to missingmoney.com. You can put in your name or your business's name. If you have questions on how to file through the Ohio Business Gateway, go to business.ohio.gov or gateway.ohio.gov. And if you just have questions about unclaimed funds in general, you can visit the National Association of Unclaimed Property Administrators at unclaimed.org.
George, if I could for just a second, just so everyone understands, you can go to our division webpage and search for unclaimed funds that belong to you, your friends, your clients, and that will show you all unclaimed funds that are reported in the state of Ohio. We have a link, though, to Missing Money. Missing Money is a multi-state search. So that will allow you to, in one search a multiple states in order to identify unclaimed funds that you might attempt to recover. So now we're getting beyond the VCA. It's just if you're trying to locate unclaimed funds that might belong to your clients or to yourself or to your family or friends, it's a very simple and accessible way to do it through Missing Money and the division website. That's all I have. Thanks.
Thank you. We do have an announcement. So this is the last year that we are accepting paper forms for reports or PDFs. So that's the bad news. So next year, we're not going to accept any of those paper forms. The reason is that we are getting an upgrade to our system. So we're getting a completely new system, and you'll be able to report directly through our webpage. You don't have to go through the High Business Gateway. You can if you want to, but if you hopefully you'll find our page a little simpler, a little easier to use. But you can file your report, remit your funds, file a none report. We'll have new instructional videos and instructions as we get closer to reporting season next year. This year, we are still accepting those PDFs. However, we are recommending that everybody file electronically if they can. We are coming to the end of our time, but that's our contact information. If you have questions, feel free to email Kelly or myself. You can call, and we'll make sure that we get all of your questions answered. Susie, do we have anything quickly that we can answer in the chat, or are we out of time?
I'm unable to see the chat at this moment. So,
Okay.
Yeah.
Okay. All right. We will. We have a hand. So if you could type your question, please, in the chat. I'll look through here.
Or send us an email, either one.
Send us an email, and we'll make sure that we answer your question, please. The poll never appeared. Okay. You are not going to be awarded CLE credit based on the poll. It'll be based on your attendance. So I apologize about the technical issues with the polling. However, if you want to type your response in the chat, you may. Safety deposit boxes require a death certificate only. That I'm not quite sure. So if you would please go.
Safe deposit box is just, it's a period of inactivity like any other property type. It doesn't necessarily have to be for death. And if there is an executor or administrator of an estate can step into the shoes of the owner and prevent a reporting in the event that they contact that financial institution and indicate an awareness of the existence of the safe deposit box that was held in the name of the decedent.
Okay. We had a question regarding a previous webinar, and that information, unfortunately, I do not have. The question is, let's see, I attended the Reporting Funds webinar in September. Was there going to be a webinar recording sent out for that? Susie, do you have any information on that?
Yep. So that particular webinar from September 18th was not recorded, and but I did post the slides, the Q&A that we did afterwards, and the previous webinar that we did with the same information back in April. That webinar is posted all on our website, and I did send an email out to everyone who attended those webinars and registered. So I sent an email, and it's also on our website. There's one place that they're housed. And if you just go to com.ohio.gov/report funds, and there's a couple of clicks that you got to go through to find it, but just type in the search reporting funds webinar, and I'm sure it'll come up.
Thank you. Let's see, is there a number of years you have to go back to review for the agreement? So we request that you go back 10 years and agree to report all of the unclaimed funds that you have or that you're holding for the past 10 years.
Obviously, if you've been in business in less than that period of time, it's for whatever period of time in which you would have been collecting money that belongs to someone else.
And lastly, we'll post this webinar replay on our website again and send it out in an email. If you did register, you will get the email with the replay on it, should you have any questions as well. With that, I think we should wrap up today. Thank you, everyone, for attending. We appreciate your time. Again, feel free to email us any last-minute questions that arise. We look forward to speaking with you. Thank you. Bye-bye.
Thank you.